Good morning, market movers for Tuesday, September 17th. Today's a little bit of a quiet open. Dow opened up about 40 points, NASDAQ up a few points, S&P up 3 points off the open. The NASDAQ actually, interestingly, was down yesterday, 4 points at the close, even though both the Dow and the S&P were up. And right now we're within 9 or 10 points on the S&P of the all-time high of 1710, which was set back on August 2nd. So we're rallying right back from that 4 or 5% decline that we saw from that August 2nd high, almost back to where we started. So middle of September, which historically is the worst month for stock performance of the 12 months, we're doing pretty well so far starting the month. So we're a little over halfway through September, and the markets are doing pretty well so far, which is interesting and a little bit unexpected, especially given the Fed's meeting tomorrow. And we should get a decision anyway from them tomorrow if there is a decision. We had consumer price index come out today, up 0.1%, very tame inflation, almost flat. Builder sentiment was flat with previous month's numbers, so that's not really telling us anything. And yields are about 2.85% on the 10-year. We haven't crept back above the 3% threshold in a little while anyway. That's kind of the key number. Waiting to see what happens on rates. The bond market, whenever you have a disparity, which in this case we have rising interest rates in the bond market, but we also have a rising stock market, those two things don't normally go together. When there's a conflict like that, usually the bond market is right. So the bond market is telling us that things are getting a little bit more challenging in the economy with rates rising, and that should be reflected in the stock market at some point, although again, as we're seeing right now, stock market doesn't seem to care. It just keeps going up. So we haven't made a new high yet, but we're awfully close, and we could very well see that. But I will stick to my guns and say September, October, worst time of the year for stock performance. We're near all-time highs, and we've got a lot of challenges, a lot of headwinds coming up that could really push us down. So if we get past this time period and nothing bad happens, no correction of any magnitude, I'll probably have to reevaluate my position and start looking for opportunities to get back into the market. But at this point, still holding a lot of cash, still very concerned about the market with current valuations, and I'm going to stick to my guns at this point and wait and see what happens during the next 5-6 weeks.